Credit life insurance. What is the significance of the following years? 1917, 1960, and 1970. Do you have it figured out yet? I'll give you a hint. It has to do with the products that we sell in the F&I office. 1917 was the year that credit insurance was first invented. 1960 was the year that disability insurance in its current form became popular, and then 1970 is when service contracts became popular. Our counterparts in the automotive business have only been selling service contracts for about 30 years, while credit insurance has been around for much longer. Is there anything to be said for a product that has stood the test of time? A gentleman named Arthur Morris invented credit life insurance back in 1917. His motto was, "No man's debt should live after him." Now, disability insurance, as I said earlier, became popular in its current form in the 1960s. Why do you think they call it F&I? Why do you think they call us the F&I manager? Why don't they call us the F&I and the SC, or the F&I and SC and G for GAP? The reason is that when finance was first introduced as a profession, there were only two products to sell: credit insurance and disability insurance. Then, of course, there was the financing that gave us the F&I. I have a theory that there is a myth, and the myth is that credit insurance is not a good value. Now let's evaluate that. In the last 30 years, what has happened to the cost of health coverage? Has it gone up? Has it stayed the same? Has it went down? Well, of course it's went up. How about automobile insurance? Has it went up? Has it went down? Or has it stayed the same? Again, it's gone up. How about regular life insurance? Has it gone up, down, or stayed the same? It's gone up too. Well, what about credit life insurance that we sell over the last 30 years? Has it gone up? Has it went down? Or has it stayed the same? In most states, credit insurance rates have been reduced dramatically. So is credit life a ripoff, which some say, when the cost continues to go down? Well, who regulates the product? Each state regulates it. They regulate the cost, they regulate the benefits, they regulate the health history, and they regulate the claims procedures. In other words, everything about the product is regulated. If this is the case, if the price continues to drop and it's regulated by the state, why do we continue to perpetuate this myth that it's a ripoff when there is a definite exceptional value to the product? Well, let's compare credit insurance to other forms of insurance. Let's take the best kind of coverage that you can get. What is it? The best kind of insurance coverage? Of course, it's term insurance, right? Buy term, invest the difference. That's what they say, right? Why do they say buy term? They say buy term because it costs less, doesn't it? In some cases, it does. Depends on your age, your sex, and your health history. But normally, it does if you're 45 years of age and younger. So how do you qualify for a term policy? Well, first you have to get your analysis and a blood test, almost always a lengthy application, and then sometimes they need to check your heart and find out just how physically strong you are. And then they come back and they say, well, here is a specific rate that we will charge you based upon all the people that are insured, or you're uninsurable, they could say. We're going to rate the policy or charge you a higher premium. They could do that. They could rate the policy and they could charge you a higher premium, or just say you're uninsurable. So is term insurance less expensive? Is it? Well, in many cases it is. Now, let's just take the typical ordinary term. How does it expire? In most cases, it expires at age 65 or 70. So that means that once you reach the age of 70, you can still carry the insurance, but you have to pay more for it, right? That's right, isn't it? No, that's not right. What it means is that when you turn 70, you can no longer buy it. So you're telling me that when I really need it, since the average person lives well beyond 70, I can't buy it after I had paid for it for many years? Yes, that's exactly what I'm saying. That's term insurance. Now let's evaluate another form of insurance, whole life insurance. Is it a better value than term insurance? Well, let's explore that. Does it cost more? Yes. So how does whole life insurance work? Well, you pay a monthly premium or a monthly payment to your plan. And part of that goes toward insurance and part of it goes toward an investment. The unique thing about whole life is that it builds cash value. As long as you pay your premium, the insurance is guaranteed through age 100. So what happens when you turn 100? Well, when you turn 100 with whole life insurance, you get the benefits. So in other words, buying a whole life policy, someone will get the benefit sometime during the contract. Is that a better value than term insurance, which is cheaper? Well, I guess it depends on what you want, doesn't it? It depends on, are you looking for very inexpensive insurance, or are you looking for insurance that will last for the rest of your life? So it depends. So what about credit life insurance that we sell versus whole life insurance or term insurance? What's a better value? You guessed it. It depends. It depends on your health history. It depends on your age. It depends on your sex. And it depends on whether or not you smoke. It also depends on what you need the insurance for. Credit insurance is a pooled risk policy or a group policy. So what does that mean? It means that everyone pays the same rate for it regardless of age, sex, whether you smoke or not, and what your health history is, as long as you qualify under the underwriting guidelines. Does that mean that some people pay more for it than they pay for regular term insurance? Yes, it does. Does it also mean that it's a significantly better value for some people, dollar for dollar, than even ordinary term insurance? And is value only based on cost? That's a good question, because if it were, a whole life policy would not be as good a value as term, would it? What insurance you buy really depends on what you need. I often ask finance people, do you have credit, life, and disability insurance on your loan? When I ask them, I get a lot of no's. What I've suggested to them, and I suggest to you, is to buy the product yourself, and the purchase will pay off for you many times over. So why do I say that? Does it cost you to own it? Well, sure it does. Could it possibly cost you more than other forms of insurance? It might. So what do you get by owning it? What you'll get, in addition to the benefit, is that every single customer, you can look in the eye and you can say, here is why I own the policy. Here is the value of the product. Now, when I ask F&I people if they think service contracts are a good value, almost unanimously they say, absolutely. I think part of the reason that is every day they walk in the dealership and what do they see in the service drive? Don't they see motorcycles being repaired? Don't they see bikes being maintenance? Don't we see essentially sick motorcycles? I know this is a little far-fetched, but let's say we have a hospital hooked up to our dealership. And let's say that every morning we come in and see people getting wheeled in wheelchairs, and would we see the value of credit, life, and disability insurance even more than we do now? Even if it were a subconscious, would we see the value more by this experience? You're in the finance office and the phone rings. You pick the phone up. Hello, this is Mr. Martin, the business manager. On the other end of the line is a distraught person. She says, excuse me, this is really hard for me to say, but my attorney asked me to call you because he said that I should check and see if there's credit life insurance on my loan because my husband was just in a terrible accident yesterday and he's passed on. I don't know what I'm going to do about this motorcycle payment. My attorney said if I had credit insurance, it might be taken care of. Well, of course you console her and you say, I'll be right back. Can you hang on for just a moment and I'll check? Now what are you hoping? Well, of course you're hoping that you were able to persuade them to buy the insurance when they purchased the bike. You're hoping that you were able to persuade them, or more importantly, that you had at least offered them the product. So you take the long walk to the file cabinet and you pull out the deal and you open it up and there it is, the credit life insurance policy. You did sell it. Isn't that walk back to the phone going to be much easier than if you didn't sell it? Is there a value to credit insurance? I'll bet this young lady would say that there's a value. I'll bet her husband that passed on would definitely say that there was a value. So, you get back to the phone and you say, I'd like to offer you my condolences. I'm really sorry about your loss, but I'm very happy to tell you that you did purchase the policy and the loan will be paid off in full. I just need to send you a claim form so that you can get it taken care of, all the necessary paperwork. That's a heavy burden that you just lifted from her, and it's because you offered it. You offered it and you persuaded them. You didn't just give them the opportunity to buy, but you actually sold them on the value and the benefit of the product. I've read books where the experts tout the key to financial freedom. One of the things they'll tell you is don't buy credit life insurance. Let me tell you something else that they say in the same book. They say that everybody should have a $1,000 deductible on their automobile or their motorcycle. Now, why would they say that? Well, they say that because the premium is less and you can take the difference, the money, and invest it. Now, is that good advice? They also suggest a high deductible on purchases like motorcycles. Again, the same people tell you that you need a $1,000 deductible on your health care coverage. Well, why? Again, the same reason, lower premium. Is that good advice? Is that good advice in the event that there's an illness or a sickness in their family and the first $1,000 had to be made up by you? Is that good advice? Well, for some people it is, and for some people it isn't. Is it good advice to have credit life insurance? It depends on the situation. Let's say the only benefit we have over other types of insurance to sell on credit insurance is convenience. Do we live in a society of convenience? Every time we go to get our money out of the ATM machine, that isn't our bank, of course, it pops up and says that fee of $2 in order to continue. Now, of course, we all answer no, don't we? No, we answer yes, we would like to continue, or we hit cancel and put in a higher dollar amount just to make it worth our while. You need a gallon of milk. It's Sunday morning. Of course, you haven't showered yet, but you need to go out and get the gallon of milk right now. Now, if you go to the grocery store, where's the gallon of milk? It's all the way to the back of the store. Realizing this and knowing that you're in no condition to see anyone this morning, what do? Well, you pop into the convenience store, don't you? And you buy that gallon of milk. Does it cost more? Well, yes. Do you pay more? Yes. Is it worth it? Is it worth it to you for the convenience? Can it be any more convenient to buy insurance than sign right here? You just need to answer this question to see if you qualify and sign right here. You can't buy insurance any more convenient than that.